Greetings to all. Thank you very much for following us in this specific and very important webinar that we have planned to share with you today. By way of introduction, my name is Mario Hidalgo, and here with me are two other consultants of the firm, Grant Thornton Tax Costa Rica, and we will be conducting this presentation regarding the Costa Rican tax system. With me today, we have Erika López and Andy Paniagua, who will also be participating throughout the presentation. Just to give you a brief glimpse of what we are going to talk about today, we are going to start with the main characteristics or principal aspects of the Costa Rican tax system, the other obligations related to the tax, which are applicable here in our country, and we are going to place our main focus on the income tax from a business perspective, what is the rental income also, and remittance abroad regarding withholding taxes. And finally, as I mentioned before, we are going also to talk about capital income. Accordingly, which are the main characteristics or the main aspects of our Costa Rican system of taxation? Well, basically, from an organizational standpoint, the tax administration in Costa Rica is in charge of the Ministry of Finance. We here in Costa Rica have ministries, not secretaries. And basically, they are the ones in charge of handling our system of taxation. So we have two different separate organizations inside this system. We have for the tax, we have the Taxation General Direction, which is known as DGT, and also Customs System, which is administered by the Customs General Direction, which is known as DGA. So all the things related to internal taxes will be handled, managed, and controlled by the DGT in the case of internal taxes. And when we are talking about importation duties and exportation processes, the Customs General Direction or the DGA will be the one in charge. Well, basically, the fundamental characteristics of the Costa Rican tax system is that it's based on a territoriality principle. Costa Rica imposes taxation on income derived from activity within the country, including selling goods, providing services, and the utilization of capital within the Costa Rican territory. Other sources of income which could not be considered a Costa Rican source will not be subject to taxation in our country, will not trigger a taxable event. This taxation will take place regardless of the taxpayer's residence or nationality. Income generated within Costa Rica is subject to taxation. Doesn't matter if you are citizens from other jurisdictions. If the income is being generated within Costa Rica, you'll have to pay taxes on that source of income. And on the other hand, if you have sources of income from abroad, generated from abroad, that will not be subject to taxes here in Costa Rica. So if you are considered or become a tax resident and earn Costa Rican income during the fiscal year, you'll have to pay eventually income tax. Non-resident individuals or other legal entities that they don't have a business presence in Costa Rica or a permanent establishment who earn income source within the country, they are subject to withholding taxes. So withholding taxes is the income tax that a non-resident will have to pay as long as he or she generates income from a Costa Rican source. In 2023, a new law was adopted by the local Congress. The number of the law is 10,381. And basically, by this law, they added an exemption to the territorial principle. And under certain circumstances, income generated from abroad, like passive income, interest, or dividends earned by companies that are part of a multinational group and don't have substance here in the country, they will also have to pay taxes under that new rule. So we have an exemption that is important to take a note about that. We will have an exemption regarding the territoriality principle, and basically is related to companies, legal entities that are part of a multinational conglomerate, and they have a company here in Costa Rica which doesn't have substance. Then under that scenario, if that company receives passive income like dividends or interest, for example, they will have to pay taxes on that passive income as well. So basically, in Costa Rica, we follow what is known as a scheduled tax system of taxation. Basically, what happens in Costa Rica is that the law establishes different fiscal treatments for the different types of income that a taxpayer might generate within the country. So we have the regular income tax that will be paid or will be required to be paid by companies that operate within Costa Rican territory. Also, individuals who have a lucrative activity will also have to pay income tax. We have salary tax in Costa Rica. When you are an employee, you are not liable for filing any taxes. The employer is the one liable to withhold and pay the corresponding salary tax to the tax authorities. Then we have the withholding taxes, and these taxes takes place when non-resident renders a service, and the payment of such service will be deemed as a Costa Rican source income, and withholding taxes will be applicable to those payments, unless we are talking about a jurisdiction that currently have in place a agreement to avoid double taxation between the two jurisdictions. So under that scenario, withholding taxes will not be applicable, and the regulations included in the treaty will be applicable instead. And finally, we have another system of taxation specifically created for capital income and capital gains. Before this reform took place in 2019, capital gains only pay taxes in Costa Rica under certain specific circumstances. But after a very aggressive tax reform that took place again in 2019, all capital gains are subject to the payment of taxes. And this is very important because if you earn this type of income and the asset that what was used to generate this type of income is not directly related to your economic activity, then you have to pay that tax. On the other hand, if the asset that you are going or pretending to be and that uh, uh, capital gain, because that asset is related to the generation of taxable income and you fall under the income tax system, you will pay for that capital gain as the normal income tax, because those gains will be treated as regular income. So if the asset that you are going to sell is not subject to your main economic activity, you will have to apply the chapter related to income for rental income or capital income and capital gain and loss. So those are the current four types of tax regimes that we have here in Costa Rica. Therefore, because of that territoriality principle, it's important to understand and try to establish in a very certain way when do you become a tax resident here in Costa Rica. And in Costa Rica, we use normally the rule of the 183 days. If you are present during one fiscal year for more than 183 days, you will become a tax resident for tax purposes in Costa Rica, regardless of the nationality of the origin of the taxpayer. That basically is the rule that we use in accordance to our income tax law. And again, if you stay more than 183 days during the fiscal year, it could be on a continuous or uncontinuous fashion. You will trigger a permanent establishment and you will be deemed as a Costa Rican taxpayer.
Now, before moving forward or diving into the tax system, it's important to have some important accounting framework understanding. So the first main point that we want to mention is that Costa Rica tax system, or Costa Rica adapted the full IFRS on 2022. Therefore, any multinational company or small medium company need to adapt the IFRS or SMEs applicable, and this is also in alignment with the income tax law. With this, one important aspect that we see typically with our US clients is that they're used to have their accounting in a cash base. However, since we adapted the full IFRS or the IFRS standards, we have to use the accrual basis in order to do our accounting. And this is also the income tax law in Article 98 is aligned with this. So what is the differences between the accrual basis and the cash basis? For example, let's say that on the cash base, you will issue or you will record your income or your expense by the moment that the cash transaction happened, which does not apply on the accrual basis. On the accrual basis, which is the framework that we use to prepare our accounting, specifically is by the moment that the transaction happened, the services or the purchase of a good happens. Based on this, the third fundamental aspect that is important to consider is that the commercial code indicates that every entity or merchant must keep a formal accounting records, and these accounting records cannot have a delay more than 3 months. Specifically with that, also the commercial code indicates that these accounting records must keep in Spanish, and the official currency is the local currency, the colón. So what could happen in the moment, because IFRS, specifically AS 21, indicates that you could have a functional currency different than your local currency. In this point, it's important that every entity that will have a functional currency different than the local currency should have an official conversion system, where this system will be taking the central bank's exchange rates, and in a daily basis we'll be doing the conversion. And this conversion will be applicable for legal and tax purposes. And this will mean that all the system reports, all the work papers, you will be able to obtain the local currency as well as the USD currency. Now, another important aspect to consider is that since 2017, Costa Rica, and the timeline that's shown below, has been the transformation that the tax administration has had with the electronic invoicing principle or methodology. So what is the electronic invoices? Well, basically, these are invoices that have to be done electronically, where they have to be done in an authorized system by the tax administration. And basically the system will be generating 3 types of documents: the PDF, which is the user-friendly, readable document. However, the system will be also generating 2 other documents, more in a IT or configuration format, where specifically we'll have the codes, and one of those documents specifically will be indicating if that invoice was accepted or rejected by the tax administration. So why did Costa Rica design this electronic invoicing system? Well, basically it was to improve the collection, automate the supervision from the tax administration, and also combat the tax evasion. So basically, what has been the transformation that the country has had? Well, on 2017, we had the first version, or let's say the most impact of electronic invoices for all the taxpayers, which was the 4.2. On July 1st of 2019, due to the finance strengthening law, the VAT had a tax reformation, therefore, which I will explain a little bit in the next slide, specifically where there were more tax rates applicable. Therefore, we have to modify the version to 4.3. And this also indicated that, well, if an export invoice or purchase invoice, well, we have to create this electronic invoice. And finally, recently, a month ago, on September 1st of 2025, there was a new version of the electronic invoice 4.4. What was the main change that happened? Well, services that are done from abroad, that Rican services that are done from abroad that happened in the Costa Rican territory, specifically, now we have to also generate an electronic invoice. That was one of the most changes that had bigger impact. Besides others, system configurations or details, specifically when the invoices are generated. So part of why we want to explain is the expense deductibility. The expense deductibility is one of the main frameworks in order to prepare our tax filings. There are business income tax filings. Why? Because the Article 8 of the income tax law establishes 3 main requirements for an expense to be considered. It's important that these 3 main requirements have to be complied, the 3 at the same time, in order to consider an expense deductible. Which is the first? Well, it has to be necessary. It has to be necessary to generate taxable income. So for example, personal expenses or expenses that are not associated with the main economical operation, these will be considered non-deductible. The support here, the main support is that they have to be documented by an authorized invoice. With this, what do we mean? It has to comply with the electronic invoice, which I explained the slide before. So the expenses have to be documented with an authorized invoice. This means that it has to be under the company's name, and that for Rican purchases or services have to be supported also with an electronic invoices. And finally, the third aspect is that if any other law indicates that a withholding has to be done to a specific service, that withholding has to be withheld and paid specifically in order to consider this expense as a deductible expense. So on the right side of the slide, we could see some of the deductible expenses that the income tax law indicates. I will not go through them of all, but maybe I would like to highlight some important aspects of these. So for example, on the net interest, the income tax law allows that if we have financial expenses, specifically with non-regulated entities, the maximum expense deductibility is 20% of the EBITDA. For depreciations, our taxpayers could have their own useful lives. However, the tax administration on their annex of the law has a specific table that contains all the useful lives that have to be applicable. So at the moment that we're doing our tax filings, we have to ensure or do a reconciliation specifically to ensure that the depreciation expense that will be reported as deductible is aligned specifically with this useful lives. The other important aspect is that, for example, let's say that a company had a loss during the period of that fiscal period. That loss can be carried forward into the 3 following years or 5 years for agricultural businesses. However, one important aspect is that that loss has to be recorded on that fiscal year. If it was not recorded, then it will not be able to be carried forward. And another important aspect is regarding the donations. Donations can be used as deductible expenses. In the meantime, these are in authorized entities, where this means that the tax administration specifically has a list of institutions and entities where taxpayers can do the donation, and also that this donation is no greater than or has a maximum of a 10% of the net income before the donation. Now, regarding the VAT, VAT is a very complex law. However, we'll try to summarize it. So on the VAT, it's important to highlight that on July 2019, as Mr. Mario indicated, there was a reformation on the law. So we have a new law, and basically this law indicates that most of the services and goods that are provided to individuals or to illegal entities, these have a main rate of 13%. However, this law also incorporated some reduced rates. So these reduced rates, specifically the 4%, will be related to the private health services or airline tickets in nation territory. The 2% most of the times will be related to private education, and as well as any type of medicine or equipment or supplies that are purchased for the productions of medicines in Costa Rica. The 1% is related most of the times to sales or importations of agricultural goods, and specifically the government has an essential list of items that are under this 1% of VAT tax rate. And finally, the 0.5 or this minor rate, a tax rate, is more related to the organic agriculture or agro-industrial products specifically that are certified by a corresponding entity. What will be the main taxable event? Well, the main taxable event of these is that that it has to be in a regular or an habitual occurrence. So it has to be habitual that recurrent that we will be selling the specific goods or services that are indicated as our main tax activity. This also has to be aligned with the territorial scope. So for example, these have to be done in the Costa Rican territory. And one of the main tax obligations specifically is this is a monthly filing that have to be filed and paid by the 15th of each of the following month, and it has a specific particularity that if there is no taxable activity, let's say for example that during that month you did any sales, you have to file the VAT return, even though you did not have any income tax or any purchase, since you are in an operative, you have an operational activity.
Thank you, Erica. Just to complement what you were saying or stating before, it is important to stress that if the goods are going to be consumed within Costa Rica or the services are going to be consumed within Costa Rican territory, you have to pay value-added tax on the purchase of those goods and services, regardless of the origin of the person that is going to pay the invoice. In other countries, there is the possibility to get a refund from those taxes because you don't live within Costa Rica. But that's an important issue because if you come from abroad, if you are a foreigner and you are going to consume those goods and services within Costa Rican territory, you will have to pay VAT, and you cannot take advantage of that payment in your country of origin and cannot use that tax for any other purposes here in Costa Rica. So therefore, this is an issue that we have trying to convince the tax administration that needs to be changed eventually. And potentially the idea is to manage or to get a tax reform that will permit to foreigners to refund this tax when they visit the country. Otherwise, everything will be 13% more expensive for them.
Now continue with the agenda. I will explain some of the principal other tax obligations that the taxpayer have in Costa Rica, starting with the local municipality government. In this case, we are going to see three main groups. The first one is the real estate taxes. In this case, well, the municipalities are responsible to collect the territorial taxes, which apply to all of the lands and permanent buildings in Costa Rica. Well, the tax is based on the value of the property registered as of January 1st of each year, and also, well, the rate will be the 0.25% of that value applying nationwide. And well, the payment in this case can be made annually, semi-annually, or quarterly, depending on the municipality rates that they have. Well, continue. Also, we have the business permits, known in Costa Rica as Patente Municipal. The business permits are mandatory license that allows to individual or companies to have legally operate in Costa Rica. Also, well, it applies as long as the business is active, regardless of the profitability that they have. And well, also is like different categories that we have that are agricultural, commercial, industrial, and miscellaneous and alcohol. And well, in this case, the tax base depends on each municipality because all of the municipalities have like different range to make the tax base calculation. Some use the net income, others use the gross income, and another municipality use the gross sales. And for the filing and payment, usually the filing of the business permit is after the close of the previous fiscal year and after the presentation of the annual rental declaration, because some of the numbers that we use to calculate the business permit are in the annual tax declaration. And the last one is an special case that is the maritime land zone. In this case, this is just for specific properties that are in coastal zones that require a municipal concession of use that specific land. So for these concessions, the concession holder must to pay a specific fee to the municipality for the right of that use of the coast zone. Well, continue with that. We have like the corporate tax, according to the law number 94/28, that basically we are going to see what are the taxpayers, what is the taxable event, the tax payment, and the non-compliance of this payment. Starting with the taxpayer of the corporate tax. Well, for that is include all the commercial corporations incorporated in Costa Rica, branches of foreign companies with a Costa Rican legal ID, and limited liability individual companies. Well, when is the taxable event? Will be for any company registered in the national register by January 1st of each year. For new companies incorporated, will be at the moment of the registration in the national registry. For the tax payment, well, for this specific tax, it's not required a tax filing. It's just an annual payment, and all of the registered entities must to pay this by January 31st of each year. And while the new companies, they need to pay immediately in the moment of the registration in the National Registry. And well, for the non-compliance of the payment, we are going to see like problems, for example, like the inability of the registered documents with the National Register, inability to obtain a corporate legal status certificates, and well, also accrual of interest and administrative penalties. And in the worst scenario, also the dissolution of the company by the National Register after 3 years of the outstanding payments. In the right side of the presentation, we can see the rates for the corporate tax. It's important just to mention that the amount of the corporate tax is calculated based on the base salary established in Costa Rica in the Article 2 of the Law 7337, and also will be related to the gross income of each entity. Basically, for example, for inactive companies, they need to pay the 15% of a base salary in Costa Rica. And after that, we are going to have rates between the 25% to 50% according to the gross income of the company. Continue with the other tax obligations. We have the educational cultural stamp according to the law 5923. In this case, the taxpayers, are the corporations and subsidiaries of foreign companies that are registered in the mercantile section of the public registry. The taxable event will be triggered every year and will be based on the company net equity presented in the previous declaration of the income tax return. And well, for the tax payment, it's the same scenario as the corporate tax, that is not required a tax filing, but we require an annual payment. And in this case, the due date for the payment will be between February and March 31st of each year. For the non-compliance, we are going to see the accrual of interest and administrative penalties. And for not registered acts, for example, if the cultural stamp is not paid in the public register, we will see like the refusal process in case that you require some documents in the National Public Registry. And in this case, for the rates, the Minister of Finance in Costa Rica will adjust this amount every 3 years based on the inflation, and basically the rates in this case are between $10 and $35 according to the net capital. Well, also we have the solidarity tax. The nature of this solidarity tax is an annual tax that is applied to luxury residential properties that are located in Costa Rica that are regulated by the solidarity tax for the strengthening of housing programs according to the law 8683. And basically, well, this taxable event mentioned that if the ownership of a residential property as of January 1st of each year will apply to any home in the country, independent of the use of this property. For example, if it's just regular use, occasional use, or recreational use, that doesn't matter, will apply to the property, and also includes, for example, for both if it's fixed and permanent structures. And for the tax base and rates, this will be based on the fiscal value of the property that will be determined by the taxpayer using like an official valuation guidance that we have in Costa Rica. And well, in this case, we have an exemption threshold that will be 145 million colones, that is around $284,000 after taxes. And well, after this amount, we are going to have like progressive brackets of the property value that will be updated every year. And for the obligation, the tax payments is annually, no later than January 15. And in this case, we have a form that is the Form D-179 that must be filed every 3 years, or sooner if the property undergoes with significant improvements during these 3 years cycle. And well, as you can see in the right side of the presentation, we have some important considerations regarding to the solidarity tax, and it is, as I mentioned a few minutes ago, the property presentation of pardon, the presentation of the solidarity tax is in a cycle of 3 years. So basically, for example, if a new owner purchase a property between this cycle, must to file their new declaration in the following year of the acquisitions, for example. Of course, if the property still exceeds like the applicable exemption threshold that we have, and this is because the solidarity tax is like a personal tax and doesn't transfer automatically with the property. So the obligation to declare the payment and to declare the value and make the payment is for the person who owns the property as of January 1st of each year. So basically, this new declaration that you present will serve for the basis for the remaining years of the cycle to calculate the payment, and you as the owner of the property must to pay this tax annually. And well, and finally, we have like the inactive companies. In the Article 4 of the regulation of the income tax mentioned that for example, with respect of the legal entities that are incorporated in Costa Rica, the compliance and formal material steps regarding to the corporate income depends on the following classification. And in this classification, we are going to find the inactive companies. That the inactive companies basically are referred to companies that are incorporated in the country that don't carry out any income generating activities from Costa Rican sources. So basically, what is the purpose of the administration with the formal steps and the formal accounting and all of the obligations regarding to the inactive companies is, for example, just to avoid the unjustified increases in the equity. For example, the tax administration is looking for the origin of the acquiring assets, also for the source of the funds that you are using for the capital contribution and acquisitions that you have. And also, well, as Eric and Mario mentioned, as of July 1st, the capital gains are subject to the taxation. So that is the other thing that tax administration looking with this obligation of the inactive company. And as I mentioned, they will have these tax obligations that I explained before, that are the solidarity tax, the corporate tax, the educational and cultural stamp, the inactive and informative tax return, and also the transparency and beneficiary finality registry.
Now, moving forward with the business income, specifically, we want to mention what will be the taxable event. Basically, the taxable event of the business income is any economical activity where you will be generating any gain. That will be the taxable event. And also, this income has the Costa Rican sources from conducting specifically activities in Costa Rica territory. Considerations to take, well, is what we talked earlier about the tax domicile, or as the territorial principle. And regarding the tax base and the tax rates, it's important to mention that the income tax is based specifically on the gross income. Now, what will be the taxable base? Now, the income tax rate will be based on the gross profit. And on this gross profit, we have to consider what will be the taxable income and what are the deductible expenses that we can obtain. These tax rates are updated in an annual basis by degree based on the income ranges of each entity, and it has different scales for legal entities or individuals. The fiscal period is from January 1st to December 31st, a natural period. However, this has not been always the same. Before July 2019, our old fiscal period was from October 1st to September 30th. However, the alignment to a natural calendar was basically to facilitate tax and accounting plannings. the business income tax filing is due 2 months and 50 days. This is around March 15th by the end of each fiscal period. Now, we want to mention some important aspects of what will be considered part of the gross income and what is left out of scope. So the Article 8 of the business income mentions that for example, income earned by the taxpayer during the business or professional year of any type of Costa Rican source income, that will be part of the gross income. Profits that come from investments or selling of assets, these will also be considered part of the gross income, and gains from the currency exchange rate, these will be also part of the gross income. What are some examples that are excluded as part of the gross income? Well, as Mr. Mario mentions, any capital gains that, for example, that was triggered by a sale of an asset, that asset is not used on their, that asset is not for the purpose to generate their formal operational income. That will not be, that was actually, since we have a scheduled calendar, that asset was part of the capital gain section and will not be considered as a gross income. However, if that asset specifically is used in their daily operations to generate income, therefore it will be considered part of the gross income. Another exception is all related to the dividend distributions. Those dividend distributions are not related to are not part of the gross income. Now, regarding exchange rates, we just want to mention that the tax administration has had different criteria about how to manage the exchange rates on the business income. However, on Article 5 of the income tax law mentions that exchange rate differences arising from assets or liabilities between the time of the transaction is carried out and the time that the income or liability is paid, or the close of the fiscal period, these will constitute taxable gain or deductible losses. In summary, basically any taxpayer that is subject to the Title First or the Chapter 1 of the income tax law, specifically the business income regimen, both accrued and realized exchange rate differences will be considered taxable or deductible. Now, as I said earlier, we have different tax rates. In this slide, you will be able to see what are the tax rates that we have for legal entities and what are the tax rates that we have as individuals. Let's say that my source of income, I am Erica López. I am as a professional services for consulting and I do not work in any company. Then the tax rates that will be applicable will be the ones down below. If I'm a legal entity, then the tax rates that will be applicable are the section that's on the first part. If you see, the tax rates are very similar to each other. Specifically, the differences are in the extreme sides, where the lowest tax rates for a legal entity will be at 5%, and it will be progressively. And if the net income is over to around $236,000, the tax rate will be at 30%. However, if we are an individual, in this case, well, if our net income is less than $18,000 a year, then we will not be subject to tax. However, if our net income is over $40,000 approximately, then the applicable tax rate will be at 25%. For individuals specifically, or for freelance or independent services providers in Costa Rica, there's two models that they can select. Specifically will be the model that, okay, we can select what will be a taxable income and will be deductible income based on the accounting records and expense deductibility criteria. But there's a presumed expense model that allows a flat deduction of 25% of the gross income without needing any support documentations. This is important to highlight that this is only for individuals, and even though that this presumed model expense, remember that the commercial code indicates that part of the obligations you have to comply with the formal obligations of having a proper accounting. So these are like some of the main criteria that we wanted to highlight regarding the tax rates. Now, if you are in a business income, it's also important to mention that the company will be obligated to have partial tax payments. What are the partial tax payments? Well, basically are advanced payments that the taxpayers do during their fiscal period to cover their expected or estimated annual tax liability. They have 3 payments during the year, which are the first one is on March 31st. The second one is on June 30th, and the last one is on September 30th. Consequences of not doing the partial payment specifically, well, you will be accruing interest and penalties, and this could trigger potential audit flags. How is the calculation? Well, the calculation is whichever of these two is greater. If the last year's tax liability or the average of the tax of the past 3 years. There's some considerations that that's what's shown on the right side. For example, let's say what happens if I'm just starting my operations or I have 1 year or 2 years. Specifically, that will be, let's say, for example, the 2 years of operations will basically it will be the 25% of the average of the 2 tax filings or the second period's tax filing, whichever of those two is greater. And also what could happen if I have, let's say, I have been having losses 3 years in a row. Well, if the company has been having losses, they will have 0 partial or advance payments. However, it's important to consider, since this is against the principle of going concern, or let's say that of an ongoing operational company, this could trigger flags for potential tax audits. Now, one main important aspect to consider or to know about is that when we're doing the tax filing of the business income, we have to do a procedure known as a tax reconciliation, or in Spanish, conciliación fiscal. Basically, the purpose of this tax reconciliation is to ensure that the taxpayers are aligned with the income tax law specifically, and that they are doing their taxable base has the support documentation. So these are the steps that have to be followed. So first of all, we will be starting with the accounting profit. The accounting profit that's from the financial statements. Therefore, you have to have your accounting on time in order to do this procedure. Then we will be considering 2 main tax adjustments. What will be non-taxable income, and analyzing the expense deductibility. Once we have these, we will be calculating the taxable base based on these adjustments, and calculating what will be the tax rates based on the gross income. After that, we will be validating if there's any reductions that the taxpayer can have in order to finally calculate the net income tax payable. So for this, to illustrate this, we have done this example. So on the left side of the presentation, we have a profit and loss statement where specifically we have remember that that part of the requirements by the commercial code is that we have to have our accounting in colones. Therefore, we can use the conversion. We have to do the conversion. For this purposes, we're using the average rate of this year specifically to illustrate the USD dollars. So on this profit and loss statement, we can see that the net operating profit before tax is around $332,000. We are adding some assumptions. Specifically, the assumptions are like the main scenarios that we see with our clients in an annual or daily basis, where there might be some salaries that maybe are not being reported to the Social Security, therefore the withholdings are not applied, that there are some expenses do not have electronic invoices, the useful lives that they're using. So these are like the assumptions that we're doing now. In this slide, we will be explaining you how we do the tax reconciliation, or this conciliación fiscal. So remember that our profit and loss statement before tax, the net profit was $332,000. So that will be our starting point, and that will be the first step. The second step is analyze What are the taxable, non-taxable income? In this case, we are doing the assumption that this company had a dividend distribution, therefore dividends or distributions are not part of the gross income. And also a common transaction that we have with our clients is that they have certified deposits. These certified deposits, these are part of the capital income, because once the deposit has completed their period specifically, a retention or a withheld of a 15% is applied. Therefore, since these were part of the schedule or of the capital income, they're not part, this interest will not be considered a taxable income. Then we have the section of all the deductible expenses. So for example, as I said, well, we have the assumption that there are salaries that are not being done, that the corresponding withholding is not being applied, expenses that they're not supported by electronic invoices, family trips are not useful and necessary to generate the taxable income. Remember the three main criteria that we mentioned earlier, they have to be necessary. Fines and penalties by law, these are not considered deductible expenses. Also, el impuesto de personas jurídicas, or the corporate tax, that what Andy mentioned, that just for the matter of being incorporated into the National Registry, this is a non-deductible expense by law. And also with the donations, in this case, the donation was done to a non-authorized institution. Therefore, that's the reason why it's being considered a non-deductible expense. So once we have these three main criteria, we'll be calculating the taxable base, where you can see that from the accounting financial statements, there was a net profit of $332,000. However, the taxable base, after doing the tax adjustments, is $539,000. In this case, or under these assumptions, the company is following the useful lives of the income tax law. Therefore, that expense is being considered deductible. If by the moment a client is not following this useful life, then we have to calculate what will be the difference, and that difference will be considered a non-deductible expense. With the corporate tax rates on this example, we can see on the right side section, specifically on step 5, that the design services, that's their business activity, is over the threshold of $236,000. Therefore, automatically, the tax rate that will be applicable is a 30% from the taxable base of $539,000. Therefore, the income tax of the period will be $161,000 to be paid. This will be the income tax of the period in the case that there's no reductions. However, remember that we have the advance payments. Therefore, under this assumption, the client did an advance payments during the period of approximately $48,000. So this will be considered, let's say, as a credit that will reduce the total amount of the income tax of the period. There could be other reductions. For example, let's say that you are you're in a taxpayer that you have a POS system. This means that each time you do a sale, your client comes and passes their debit or credit card, that there is a withholding specifically that can be used as a reduction. However, that must be aligned with your bank withholding statement. Also, let's say that in your VAT tax returns, you have some favorable tax credits, you can use those along too. So in this case, the net income tax of the period will be 59 million colones. Remember that our local currency is our formal currency is the local currency. Therefore, from the accounting standpoint, when we do the conversions, that will be approximately $113,000. However, by the moment that 59 million colones will be paid, there will be a different rate for that period. So there's something to remember, that since we have a local currency, there will be always some differences between the amount that our USD financial statements show of the income tax payable of the period versus the actual amount that's going to be paid. Now, moving forward, Mr. Mario will be explaining the remittance abroad withholding tax.
Thank you very much, Erica. Very clear your explanation. Well, regarding withholding taxes, as we mentioned before, This is the tax that Costa Rican or an individual or a company, which will not be considered as a Costa Rican tax resident, will have to pay if this company or this individual renders a service to a Costa Rican client. This withholding taxes will not be applicable to merchandise, only for services. So in other jurisdictions, we have been able to establish that the importation of goods will trigger both the payment of custom duties and potentially services related to the importation of such goods. Nevertheless, until today in Costa Rica, withholding taxes are only applicable to service rendered from abroad, and the payment of such services will be deemed as a Costa Rican source income. And that's where this issue becomes a little bit tricky, because our tax administration understands that any service rendered within Costa Rica or that was used by a Costa Rican client, the payment of such service will also have to be deemed as a Costa Rican source income, regardless of the place or the location in which the provider of the services is located. So in the law, we have a couple of articles, couple of sections that try to establish in a very general way, and that's the problem with this particular regime, is that they establish in a very particular way when you are in the presence of a Costa Rican source payment. So if you read the different articles, they're a little bit confusing, and that the tax administration has taken advantage of this situation, interpreting the law in their favor. Therefore, any services that could be rendered from abroad that are going to be somehow used or consumed within Costa Rica, they understand that the payment is subject to withholding tax, and you cannot pay the whole amount to the provider, which will be the taxpayer here. But the catch here is that the payer of that service is the one liable before the tax administration for the payment of such tax. So if you don't comply with the withholding of the tax, or you don't pay that money to the tax administration in a correct way, the tax administration will be after the client of the service provider, regardless of the fact that the taxpayer is the person that is going to render the service from abroad. So it is also important to stress that in accordance to Section 55 of our income tax law, there are certain types of payments that will be deemed as a Costa Rican source type of payments, regardless of the fact if the service provider comes or not to the Costa Rican territory. And to give you some examples, we have technical assistance, the payment of interest, the payment of intellectual property, payment of royalties. Those payments, if the individual or the company that it's taking advantage of that intellectual property within Costa Rica needs to pay that use of the intellectual property abroad, that will, in the understanding of the tax administration, that we will be subject to withholding tax. And the other consideration that you need to consider here is that we have a lot of different tax rates. In some other jurisdictions, you have like a common withholding tax rate that will be applicable to all situations. Here in Costa Rica, we have different rates for different taxable events. So in the case of insurance provided from abroad is 5.5%. In the case of international transportation or communication, it's 8.5. For the payment of workers that have an employee here in Costa Rica, they're considered in the meantime as non-resident, the salary that they receive will be subject to withholding taxes on a 10% rate until that person becomes a tax resident. Regarding dividends, the payment of return earnings abroad is 15%. In the case of intellectual property related to movies, shows, recordings, music, and any other similar visual or sound-based material is 20%. For professional services or in the case of technical assistance of any kind, 25%. And as we mentioned before, that's the tricky part because in the eyes of the tax administration, if the service is going to be used within Costa Rica, they understand that the service is subject to the payment of the withholding tax. That means that if you owe them $1,000 US, for example, and you have to apply a withholding tax of 10% using one of the examples in the table, then you will have to pay 10% of that $1,000 to the tax administration, and the remaining amount should be sent abroad to uh, the service provider. And as you already, or many of you will know, many service providers, they don't like to uh, be part of this withholding taxes. So they ask for the payment of the net amount included in the invoice. And that normally triggers a problem to the client here in Costa Rica, because if this person is somehow in a situation in which he or she has to pay that tax on behalf of the service provider from abroad, that will be a non-deductible expense here in Costa Rica. So we have to stress here that this regime regarding the withholding taxes has become, in many cases, an important deal breaker regarding many transactions between companies abroad. It is also important to add that if the company is going to be operated within a free trade zone regime, uh, these taxes regarding the withholding will not be applicable, for example. So there are certain situations and certain cases in which this type of tax will not be applicable. And basically, it's when you are operating within a free trade zone regime, or if you are going to render a service that, even though was performed within Costa Rica, the service is going to be consumed outside of Costa Rica. That will be deemed as an exportation of the service and therefore will not be subject to withholding tax rates here in Costa Rica. So basically, that's the part of this tax that you need to take into consideration. And there are some important questions regarding the potential taxable event. And basically, you have to understand, as I tried to explain before, if the service is going to be used here within Costa Rica or will have an effect within Costa Rica. Is the payment being made to a non-resident? That's very important to see if we are in the presence of withholding taxes or in the presence of the normal income tax, and learn that some of these type of payments are either expressly regulated as subject to withholding tax, like the special cases that were established in Section 55 of the income tax law, or if the services somehow are going to be used here in Costa Rica, you have also to pay this withholding tax.
Well, and for the last part of the agenda, we have we have the capital income, and the first part is like the legal base, and that we have in the Article 27. that explain what is the taxable event for the capital income. And in this case will be the receipt of any Costa Rican source of income, whether in cash or kind, derived, sorry, from capital and from realized capital gain or losses originated from assets or rights owned by a taxpayer. As you can see in the right part, around the Article 27, we have like three main groups that are the real estate income, the capital gain and loss, and the movable capital that we're going to see right now. For example, for the definition of each of these, the first one, the real estate capital, basically is the income from leasing, subleasing, and the transfer of rights or privilege to use real estate. The second, the movable capital, is the income in cash or kind of time from transfer of own funds from third parties. Also, the income derived from leasing, subleasing, and transfer of right of use for movable capital, such as the money, royalties, or intellectual property, or intangible rights. Also, we have the benefits received from participants in the mandatory pension system, the laboral capitalization fund, and voluntary pension plans. And the last one is the distribution of available income in the form of dividends, equity shares, or surplus distributions from cooperatives and solidarity associations. And the last one is the capital gain and loss. That is basically the change in the value the taxpayer assets resulting from any modification in their compositions, including gains from the sales investment fund shares. Well, in this part we have like the taxable income and expense limitation. Well, according to the Article 31 in the income tax law, indicates that the tax rate on income of the capital income and capital gains will be the 15% with exceptions. Basically, for the first one, the real estate income, and the calculation will be between the difference of the gross income and the deductible expenses. In this case, the tax administrations give you the deductible expenses that may not exceed the 15% of the compensation amount. And we have like an exception, sorry, for the non-financial investments fund that may deduct maximum of 20% for the compensation amount. In the right part, we can see like a brief example for the real estate income. If we have a rental of $10,000, we can have like an expense deductibility of 15%. That will be $1,500. And for that part, we are going to have a taxable income of $8,500, and to that amount we are going to apply the 15% of the tax, basically. And for the second example, we have the movable capital. In this case, the gross income will be considered the taxable income, and we don't have a deductions permit. Basically, if we have the same rental of the $10,000, we don't have any expense deduction allowed. So basically, we are going to calculate the tax rate over the $10,000. And for the last one, for the capital gain and loss, we have two different scenarios. Because in anonymous transfers, basically, if we have like the difference between the transfer value and the acquisition value. So if the property acquisition, if the acquisition was previous to July 1st, 2019, we have two options. The first option will be like take the 2.25% of the sales price in the first sale that we have, and the rate will be 2.5 in case of a non-resident individual. And also we are going to have a second scenario after July 1st, 2019, that is basically that you have the sales price less the acquisition value, and over that amount you need to calculate the 15%. So basically, if you have the acquisition previous to July, you can make the calculation in the both scenarios and use the more favorable scenario that you have, But if you have the acquisitions after July 1st, 2019, you just have one option that is the sales price less the acquisition value, and after that you calculate the 15% tax rate. Well, and the last part of the capital income, we have the dividends, and basically we have two options for the dividends. And is, for example, if the dividend is between a Costa Rica company and individual or foreign entity or a holding company, you must to withhold the 15% of the gross amount of the dividend. But for example, the only option that this transaction doesn't apply to any withhold of the 15% will be if the transaction of the dividends is between two Costa Rican entities that have economic activity, and that basically the two companies are active in the Costa Rica system.
Just to complement what Andy was saying, it is important to stress that if you're going to generate from the beginning real estate related income or movable income, you will be required to be registered under this specific system. And will not be allowed to use the income tax system as was explained before, because by certain specific provisions of the law, any individual or company that starts with a rental or real estate income business or movable income, you will be registered under this system by defect. And eventually, if you have an employee duly registered before the Social Security Administration, you can potentially migrate to the traditional system, which is the income tax with the 30% income tax rate. So some people don't have this understanding of the law and can create problems. If you decide to establish a company, you purchase an asset within Costa Rica and start renting that asset to third parties, then you have to understand that at the beginning, you will have to start with this system. When you receive these types of income that Andy was referring to, you will have to use this particular system. But eventually, potentially, you can migrate to the traditional system as was explained before and known as the income tax rate, which we normally call traditional system. Well, that was the information that we had today to share with you. I don't know if someone would like to formulate a question for us. Well, there are no questions in the chat, so we will terminate this webinar at this time, but regardless of that fact, you will be able to reach us by sending emails to our accounts, and we will be more than glad to try to assist with any issues regarding the tax aspects that we try to cover today. So I will let my companions say farewell to you and thank you very much for your time and patience.
Well, it was a pleasure explaining you this material. As Mr. Murray said, feel free to reach out to us if you have any questions. And also, it's important to say that this webinar will be saved in our GT website on YouTube, so you could see it anytime you want.
Thank you for a lot of attention in this webinar about the introduction to the tax administration in Costa Rica, and we hope that you can use this information to understand more about the system in Costa Rica. Thank you.